Bitcoin tumbles in reaction to this morning's CPI numbers. Raoul Pal weighs in on XRP's role in CBDCs, and I've got my eye on two spicy altcoins, but you gotta stick around till the end of the video to know what they are. Welcome to BitBoy Crypto, the people's channel, home of the BitSquad, the largest and greatest crypto community in all of the interwebs. No channel works harder to keep you in the know about crypto. Join the movement to support crypto adoption by smashing the like button, subscribing to the channel, turning on notifications, and sharing this video with a friend. My name is Frankie Candles, and this is your nightly crypto news wrap-up. Let's get it.
A little bit higher than anticipated, 0.1% rise for the month of August in the headline number, which is more than the flat reading that we had last month and less than the 0.1 negative reading that was expected, pushes the year-over-year rate to 8.3%. The forecast had been for 8.1%, so we're a little bit higher. We'll check into the details and see why that is. The core, which matters more to a lot of people, rises 0.6%. That is double last month and double what's expected, pushes the year-over-year rate to 6.3% from 5.9% last month. The expectation was for a 6.1% move. So some bad news on inflation here, but does it really matter? Because everybody was kind of expecting the Fed to go 75 anyway.
Economic experts were humbled yet again this morning as they projected inflation to cool off and for the CPI numbers to come in at 8.1%. But to their dismay, it came in at 8.3. This unfortunate turn of events sent the markets, Bitcoin and crypto included, back down the hill. It could always be worse. June's CPI was 9.1%, July's was 8.7%. This marks the second month of inflation falling at least a little bit, but since August's numbers were still higher than expected. That tells us that the fight against inflation is still a Donnybrook, and the idea of the Fed hiking the interest rates at least 75 basis points is basically cemented. The story of the year for crypto has been that the Fed has been raising the value of the DXY, which consequently hurts the stock market, which consequently hurts crypto. Right at 8:30 this morning, when the CPI numbers were released, Bitcoin tumbled 3.5% in the first 5 minutes, and about 7% over the next few hours. A hanging man candlestick was printed on the 7-minute chart right before the big drop. A hanging man candle or bearish hammer candle could be a good indicator for a trend reversal and shows that the bulls have lost control. How much control have we lost? Some are still saying that the bottom was back in June, but the CEO of a popular crypto analytics website known as ADVFN, Clem Chambers, stated that if we lose the $17,000 level, a $10,000 Bitcoin is in the cards. Do you think 10K is a possibility, or are we going straight to the moon? Let us know in the comments down below. And now let's see what Frankie Candles thinks. Time for a market watch.
All right, guys, let's jump in and do a little market watch here. We've got Bitcoin coming in at $20,186. That's right, down 10% on the day. Absolutely brutal. Ethereum coming in at $15.76, down almost 8% on the day. Now, I want to bring you guys over to the Bitcoin chart. If you guys watched the nightly crypto news wrap-up last night, you will know that we were looking at the 4-hour chart. We did have that bearish divergence forming up against key resistance. We were expecting this move down. We absolutely got it perfectly. Now, the question is, where can we go from here? Now, if we were to see this dump get absolutely brutal and we break this point of control, we would be coming down to key support right here at the value area low, coming in at about 18,825. And if we lose that and we come down to the 786 and that does not hold, this is where I would start to target the levels down to about $14,000 to $12,000. I know some people are calling for 10K, and that, in my opinion, if we lose this 786, 10K would not be out of the cards, but we're not there quite yet. We would have to wait till we come all the way back down to the lows that we made here in June and break those to come lower. So not quite time to full-on panic just yet. But if you guys want to follow me, it's Frankie Candles on YouTube or Frankie_Candles on all socials. Back to the news.
Thanks, Frank. There's so much more to XRP than the constant noise about this court case that has been dragging on forever. For a quick update, the case has progressed to the summary judgment, which began its opening motions today. Summary judgment is defined as when one party believes that there are no facts left to dispute. I have faith in XRP's lawyers, and I hope they get this sorted out, but that's not why I want to look at XRP today. Regardless of the court case, understand that XRP is on the standards body for the ISO 20022 because the XRP ledger is an excellent blockchain infrastructure that's optimized to handle the global cross-border payment system. There's a reason Ben and AJ based an entire portfolio around the ISO 20022. XRP could very well find pay dirt in the world of CBDCs because it already has the infrastructure to handle a project that large to scale. In a recent AMA, Real Vision CEO Raoul Pal stated, "It's a money transmission network, and it does quite a good job of it. It has deep connections with global governments around the world and has worked really hard on it." So I think if you lift the legal issue, the probability is that the value of the chain increases significantly as the world moves toward central bank digital currencies. I think the XRP network is going to be somewhere at the center of all that. He's not just saying that because it sounds good, he's literally right on the money. The more I think about it, XRP's stance in America lessens less and less if it's still posed to become the common denominator for global cross-border payment systems. Coins to watch before we wrap up tonight's video, I want to bring to your attention 2 coins that have serious potential. Bear market or not, you want to start dollar cost averaging or at least make plans to DCA, considering a lot of coins are down 60 to 80% from their all-time highs. One coin I've been looking at is Hedera Hashgraph, aka HBAR. It bounced up over 25% in the past few days, and it still held its ground after the CPI numbers took their toll. It's still up around 13% since September 6th. A good reason for a part of the pump was that it's been listed on Coinbase. It's formed a nice double bottom with a strong floor on the weekly chart, and now that it's more accessible, it could very well run from here. With an all-time high of 57 cents, with it trading around 6.5 cents right now, an 8.7x sounds good to me. The other coin I've been eyeing up is no other than Ravencoin.
Hello.
It's up about 240% from the June low and about 107% since the start of this month. It's still only at 6 cents with an all-time high of 29 cents. It's just shy of a 5x away from its all-time highs, but I think it could surpass them for one reason and one reason only. All those Ethereum proof-of-work miners gotta go somewhere, right? Food for thought. That's all I got. Frankie Candles out.